Blockchain Worldwide here. I'm Lashon Bush. This is my partner, Akram Shaban. And, we have Jung Kim of Lantern Finance joining us today. He's going to discuss a little bit about the journey of Lantern Finance and communicate the future as well. We'll ask a few questions. We'll have a great time. And again, how's that sound?
Sounds
Sounds
amazing.
great. No, thanks for having me, guys. Really excited.
Absolutely, absolutely. And I want to take it out honestly, a lot of things have been happening. So it's glad that we are in the same field where, we're focusing on the future finance, right?
Sure.
Again, so Young, I want to get you the floor here. Tell us more about how you started and everything. So for the
Yeah, yeah.
audience who are listening.
No, for sure. Yeah, and again, thanks for having me on, guys. Really excited for this. Yeah, just to, maybe it makes sense to start with like my background, my professional background, and how I got into crypto, how that led to Lantern with my co-founders. Yeah, so Lushan, you heard this already, but basically I come from the TradFi world. Started off my career at Capital One and then Silicon Valley Bank a little bit after. In those banks, I was doing like leverage lending, right? So basically like lending to big, like private equity companies when they want to acquire other companies, they raise a lot of debt, right? So that's what we were financing. So I was in the credit space for a while. But on the crypto side, I've been in crypto for like in a very small way, obviously, because in like 2016 when I was in college, and since then I've been dabbling in crypto for a while. But I don't really do anything with my crypto assets because I frankly was afraid to do anything, right? I had used I forgot which like Coinbase or Kraken or Gemini, one of them, to buy my initial crypto. But in like the 2017, 18 era, and later in 2022 or 2021, there was like a big boom in ICOs, DeFi lending platforms that came up and disappeared as well. But even moving my crypto from one place to another, I would get heart palpitations, right? One little mistake and it's gone. There's no customer support. There's no recourse. I think a lot of maybe your audience members or you yourselves might kind of resonate with that. It's financial freedom, but there are consequences to being your own bank, right? It's not as easy as the traditional kind of financing world. So yeah, so I missed out on the ICO boom, the DeFi summer of 2021 or 22, I forgot. But what I did get involved with was a platform called BlockFi back then. In 2019, I think I just read a CoinDesk article about this platform called BlockFi. You guys might be familiar, as your viewers might be familiar as well. But there were these companies called like BlockFi, Celsius, Voyager. There were a few, and they were kind of pioneering crypto-backed loans, right? They make it very easy in a centralized kind of infrastructure to kind of put in crypto. You could earn yield on it, but you could also borrow dollars against it, access liquidity. And for me, that was just a game changer, right? The ability to access liquidity against my crypto without triggering capital gains taxes, and using that capital to either invest, diversify into stocks, buy more crypto, covering emergency bills, right? That was a game changer for me because I was like a long-term holder and believer in crypto, and I didn't want to sell my assets to do other things with it, right? So I fell in love with those companies. But fast forward to 2022, we all know what happened, right? There was a huge implosion in the space. All these lenders, they collapsed. And I, along with millions of others, were impacted by the bankruptcies of these lenders. I lost a huge chunk of my crypto back then, for me through BlockFi. My co-founder, Prince, he was also impacted, but by Genesis, some other platform. But basically, when everything imploded, my co-founders and I got together and we were thinking how does this happen, right? Because to retail and to the public, they're saying all of our loans are over collateralized, which means the value of the crypto is worth more than the loans that the borrowers, such as myself, took out. So how do you mess that up? Turns out they were they were double dipping, right? They were making money as a lender on the loans, charging interest and all that, but also they were making money on the collateral side. They would take the crypto collateral, they would do some weird stuff with it. Some were lending it out to crypto native hedge funds for like speculative purposes. on an under collateralized or an unsecured basis. Like Voyager, they famously lent Three Arrows Capital like $650 million unsecured, not a single cent of collateral. BlockFi did some like weird like grayscale Bitcoin arbitrage trades where they lost, I think, like hundreds of millions of dollars. Celsius did some DeFi yield farming and they lost the keys to that. So just a bunch of things that they should not have been doing, right? So that's when, we thought, okay, like there's a huge gap in the space. We still need this for ourselves, and I'm sure like others do too. So that was the inception of Lantern. Let's do lending in crypto the right way, right? Just, and with Lantern, we also do only over collateralized loans. But unlike the previous lenders, we don't mess around with your crypto collateral, right? All crypto collateral sits in our cold storage. We use BitGo as our qualified custodian. They're a large US-based, company that they exist solely to basically custody crypto assets, right? That they're, and all crypto assets with Lantern sits in BitGo's cold storage. So it's not in hot wallets, it's in cold storage, which is safer. And the cold storage is insured up to $250 million. So we set this up as, conservatively as possible. And, because the whole reason why people borrow against their crypto is to protect their crypto collateral, right? So long-winded way of saying that's kind of what
Sorry to
Lantern
interrupt.
is.
Quick question for you. Is it $250 million per account portfolio?
It's a great question. So the way I understand it is I could be wrong, but the way I understand it is it's effectively 100% coverage, because I believe how BitGo does it is they have different silos of multiple wallets across all their institutional clients, including Lantern. And again, from my understanding, each silo is limited to $250 million worth of crypto at any given time. So then, and each silo is covered under the insurance. I believe they use an international insurer called Lloyd's of London. So
Okay.
effectively,
Yep.
it's, yeah.
So Jung, I don't know if you understand this. I may have communicated this during our conversation, but I am a licensed life and health insurance agent, and so is Akram. So
Right.
We're very familiar with Lloyd's in London. They're one of the most reputable insurers that exist, one of the most long-standing. And I'll go ahead and give the floor back to you, Jung, please.
Yeah, that's pretty much it. Yeah, Lloyd's of London, they're the ones that BitGo uses to insure, and through BitGo and us, our clients' crypto is also insured by that under BitGo's cold storage ecosystem.
Right. I
Wow.
want to ask also, when people hear using crypto as collateral, what does that actually mean in particular terms for the audience who are like, who are listening?
Yeah, great question. So people can choose to take out. So basically, okay, more likely than not, if you're listening, right, you are an investor in crypto, at least some portion of your portfolio, and presumably that means you're long-term bullish on the state of crypto, right, as an asset class. So you have an asset which you expect over the long run to appreciate in value, right? Short term, there might be ups and downs, sure, but over the long run, that's why you invest in it, right? And because over the long run, you think this is going to be worth more than what it is today in dollar terms, you don't want to sell it. You want to keep it, right? But other expenses might come up. You might want to, I don't know, pay for a medical bill. You might want more capital to start a new business, to invest in real estate, stocks, or buy more crypto, whatever you want, right? You could do that without selling your crypto through a loan. And with loans, it's not like if you sell so the alternative obviously to get capital is to sell your crypto, right? But the two issues with that is, number one, you're missing out on any future upside that you invested in because you thought, you think obviously long term it's going to go well, but if you sell it, that's it, right? You convert it to cash at that current present value. But number two, when you sell it, you trigger capital gains taxes. It could be short term or long term, whatever. But if you're triggering the capital gains taxes at a price that you aren't happy with, why do that when you could take out a loan, which is completely tax free, and you could defer the capital? You do have to. There's no way getting around paying taxes. You do eventually have to pay it. What if you do sell your crypto in the future? But you could delay that as long as possible through loans, and that's why people take out, loans with us.
Oh, crazy. Yeah, that, because honestly, like, even I've been hearing also from the government aside that, those regulations are happening for crypto, since now this is a new market and it has to be regulatory clarity, right? Is
Yeah.
what they've, of course, Ripple themselves been fighting for, right? So
Right.
with that extension, how does that regulation impact your business and the clients you serve specifically?
I'm sorry, how does what impact?
Yeah, so how does the regulation impact your business and
Yeah,
the clients you serve?
great question. So regulatorily, it's been under the previous administration, under President Biden and the former head of the SEC, Gary Gensler. It was very tough. We incorporated Lantern and started building in March of 2023. So that was still the Gensler kind of era. Frankly speaking, it was very tough because there were so many gray areas under the law that didn't really specifically claim crypto. Even back then, is crypto a security? Is it a commodity? Like, does the SEC even have jurisdiction over this? It wasn't very clear. But the SEC was going around suing crypto companies left and right for whatever, anything basically, because it's such a gray area that anyone touching crypto can theoretically be considered breaking a rule, right? Because it's so gray. Since then, we've come a long way, I think, especially in the US, under President Trump and the new crypto-friendly administration, and even Congress has been pretty crypto-friendly across both the Democratic and the Republican parties. It's just been a lot easier to navigate, frankly. But for us, we're a regulated lender. We're registered with FinCEN as a money services business. We comply with all the KYC AML rules. So when a new client signs in, creates an account, they have to go through KYC, or if you're a business, KYB. All crypto deposits, like when you send your collateral to us, all of that's checked on our back end by Chainalysis, which is a pretty massive like anti-money laundering, like know your transaction company in crypto that even like most 3-letter government agencies use, like the FBI, CIA, and whatnot. So we comply with every like US laws, and that is pretty important because there's a bunch of lenders, and even in DeFi, that aren't regulated, right? But that means if something goes wrong, you don't have any recourse. There's no, there's no consequences, right? In our case, if Lantern does anything funny with your money, there's real consequence. Like, you guys now know who I am. Like, we're all public,
Jung,
our management. So
if I may interject for a second, you know what? Right, I've actually used the service provided by Lantern. We talked, and the team was able to walk me through applying for a loan after depositing collateral. And then I actually yesterday made a withdrawal of, I guess, a buffer from Lantern Finance back to, I guess, an exchange that I leveraged. No, I'm not going to name the exchange, but you had mentioned personal accounts versus business accounts. I have a business by the name of Give Your Witness 1313. It's a family office. How long does it take to set up a business account? I believe I applied for a business account when I signed up for my personal account. The personal account was immediate. Does a business account take a little longer to establish?
No, business account should also be pretty instant as long as you have the right information. So yeah, for KYB, it's just an additional step of, obviously the legal name of the company, the EIN number, which is like the like SSN equivalent for businesses, the company's official like address, and then
Right.
KYC for the main beneficial owner or owners, and that's pretty much it. If you have
If
everything
memory
ready,
serves me,
yeah,
if memory serves me,
yeah,
I remember providing the KYC information.
right.
Well, I signed up for the business that provided the KYB information, but I was also prompted to provide the
Yes.
KYC information as well.
Yes, exactly. Because even if the business is all good, we need to know, who actually owns the business, and that's just a function of the requirements under the applicable laws.
Yeah, because I did hear that if the KYC is not properly set up, the government can confiscate the assets, is what I heard.
Right, because basically, there's a lot of reasons for why KYC and KYB exist. The most common reason is obviously to prevent any like money laundering from like terrorists or just any sanctioned countries, right? So it's just kind of to protect, I guess, the overall financial ecosystem, to make sure the U.S. Finance system isn't being abused. And because with crypto we touch money and we're a lender, right? So we take in crypto and we not give out, but lend out dollars or stable coins. So that's why you were also required to do KYC and KYB as well. Yeah.
Jung, great insights. I don't know if we all grasp the enormity of how early we are and how early the service that you are providing to the crypto community at large is in terms of the rest of the market. Could you speak to that a little bit and what that means?
Yeah, for sure. I mean, so crypto, I mean, I don't know the exact numbers right now because it keeps on changing, but I think the overall crypto market, even at its peak, including Bitcoin, was maybe like 4 trillion or something like that. Like Nvidia alone, I believe was like, I don't know, like 2, 3 trillion, maybe even more, as a single stock, let alone the entire stock market. Gold's market cap is, I think, like 20 plus billion, maybe more now, or sorry, trillion. And so, crypto as an entire asset class, again, not just Bitcoin, like all of crypto in its entirety is still an infant in terms of the market cap as well as the length of existence, right? And right now, even though crypto's only been around since 2008, right, when Bitcoin was first created, in less than, like, I guess 20 years, it's already being included in 401ks, in ETFs now in the stock market. The U.S. government is basically legitimizing it, through all like the Genius Act. There's a bunch of acts that are laws that are making it very clear on how crypto should be treated. So we're very early, and again, just not financial advice, but I'm obviously biased, and as are you guys, because we are working in crypto. We're biased towards, to being optimistic towards the long-term value of crypto as an asset class. And for people like ourselves who believe crypto will be valuable and even more so over the long run, loans can be a very powerful wealth generator, right? If used properly. Obviously, if you take out our loans and you use it to, I mean, you can, but if you kind of use it for like, to buy jewelry or, cars or just whatever, right? But that goes with any kind of debt, right? There's a bad debt and there's good debt.
You gotta be smart.
Right. If you're smart with the loans, it's a tool. It could be used for good or bad. But for crypto-backed loans, if you use it properly, it can really compound your wealth, right? You keep equity in your crypto over the long run. The value appreciation is yours. But also, you could use the loan to invest in other stuff, right? And keep growing your wealth. So that's the implication, that our product provides.
And you know what? So you're opening up liquidity for holders of this new asset class, and those that are keen enough to take advantage of it will reap the benefits.
Yeah.
Exactly. Yeah. That's the idea.
I also want to add into that because I saw the news regarding Ripple National Trust Bank. They're getting a federal banking license, right? So of course you guys are in the business, of course, using crypto as collateral, but also what I've heard that Ripple basically is making the holders like you can lend your crypto without you selling it. It's kind of like you become your own bank by owning XRP, the keys to the financial system.
Right, right.
Yeah, I want you to have you heard of that specifically? Like you can use crypto as just
to earn yield.
And Jung, we're big XRP guys over here,
right,
so we're beating that drug. If you didn't know,
no.
But business is starting to pick up in the XRP lane as communicated. I know Akram asked a question.
Right. Yeah. The XRP, I mean, Lantern as a company, we're personally too, we're pretty bullish on the XRP ecosystem and the community. It's like for the past few decades, like or decade or two, large banks have been kind of lobbying against crypto and trying to like working to delegitimize it because it's competition over the long run, right? But now these crypto entities are becoming banks in their own right, like literally and legally, right? So it's pretty freaking big news in my view that Ripple is becoming a bank, but not just Ripple, right? But other companies as well, including BitGo, our qualified custodian. They're also conditionally approved to become a bank and trust. They're already a trust to become a OCC chartered bank, right?
Wow.
So that's pretty massive. Wait, but to answer your question, Ikram, so I haven't heard about Ripple Labs itself creating. Maybe was news about like helping people generate yield on the XRP, but I do know there are partner ecosystems like the Flare network and some other companies like I think they're called Doppler, where they do let people like stake, quote unquote, like synthetic stake their XRP and earn yield in some other way. We're like, we have friends in both companies. We're still kind of like looking at ways to offer something like that to our clients, but nothing yet because we don't. Long story short, we're not sure about the safety of those things yet. We don't want our clients to be the guinea pigs for this. So until it's like tested out a little more robustly by other platforms, I think we won't be offering yield products yet for XRP.
Yeah. So because normally, that specific topic is going to be in like much more later in the future, right?
Right.
So like becoming your own bank, but in the same way, like where do you see crypto collateral lending in the next like 3 to 5 years from now?
Yeah, in the next 2 to 5 years, I think I think it's gonna be as maybe not as commonplace as getting like a business loan or like a regular personal loan quite yet. But we are already seeing like big banks, like I think JP Morgan just announced that they're open to doing Bitcoin-backed loans, presumably again to massive like institutional clients, right? Not to retail yet, obviously. But that's a good start, right? Bitcoin and for institutions. In 3 to 5 years, I think with this current pace of progress and adoption, and even this administration, the crypto-friendly, Trump administration, they're also in office for the next three years, right? At least. So yeah, I could see adoption growing rapidly for crypto back lending in different various forms. For us, that's obviously good news for us because that further legitimizes kind of what we're trying to do. And as one of the existing players, I think we're well positioned to kind of service the influx of demand that comes from legitimizing borrowing against your crypto. So yeah, very excited about like I mean, again, biased, but yeah, very excited over the next 3 to 5 years and even beyond.
Jung,
Absolutely.
you mentioned something that I want to harp on, that being the trust issue, right? The approach that Lantern has taken as far as putting the pieces in place to provide that assurance is much appreciated on this. And the trust of doing business with an entity is going to affect individuals of business to transact.
Right.
They don't want to risk their life savings. They don't want to take money out of 401ks and put it into assets that are volatile. So making sure the risks are mitigated, and even showing up to spaces like this, and having a meeting goes a long way, right? Know your
Right.
KYB, right? KYC.
Yeah.
So the level of assurance and a trust that is put in place just by the founders of Lantern making themselves accessible is going to pay great dividends, and my level of trust and confidence is going up, not only because of that, but because of the very conservative approach by which Lantern has established itself in this space. So thank you for that.
No, of course, and that's kind of like our not so secret sauce, right? We took the page from Amazon and Chewy.com, right? Very different industries, but they've kind of proved that you can scale customers, like really good customer support, right? And for us, even from like our very first loans that we did when we first started to now, we've been manning the phones ourselves as founders, and now we have really great customer support folks that I believe, Lashon, you've spoken with. Shout out to Jeff and Ed. They're really great. And as we grow bigger and bigger, we will be adding more humans. There's no AI or robots that will, like automated, voices that will pick up when you call. You could call our number and text as well, or email. You can set up a video call as well, whatever you want. And a real human will show up every single time, right? you know,
That's
in
huge.
crypto especially, right? As I mentioned, anytime you even move crypto, let alone borrow against it, or using a company like Lantern for the first time, it's nerve-wracking, right? What if there's just so much scams out there? There's no customer support. One little mistake, everything's gone. It's just very scary. And every crypto company that I like, even like Coinbase, for example, right? They're massive, but you can't get a hold of someone. And even if you do, it's someone from offshore where they don't know their own systems. Whereas our support is all US based. Like we're intimately familiar with all like most of our clients that have ever called in. And we expect to scale that as we get bigger too. The
Yeah,
human
That's
touch.
I
the
want to say,
advantage.
yeah, of course, because honestly, the first thing in business, like I always say, like we're in a business, you know, not for companies, stuff like that. It's just like we're in business to make relationships, right? And having that
Exactly.
loyalty in that company, like you have the clients trust you into like, oh, anything happen, changes needs to happen. They have that person they can call,
Yes.
right? And in the
Yeah.
same time, it's fascinating because honestly, in the same time crypto space is pretty hard to understand. It's really complex. So there's a lot of people losing their money with these,
Yeah.
of course, meme coin and stuff like that. So it's good that what you guys are doing in the agenda, like I completely support because honestly, I've seen definitely those automated robots,
Yeah.
taking care of clients. There's no loyalty, stuff like that, and that works for the long term, right?
Right.
Like you'll even have referrals of people like, yeah, like those people that always answer me, like
Right.
whenever I need anything. So that's just pretty huge. And in the
Yeah.
same time, I want to say that a lot of changes have been happening a lot with the finance sector right now. As things come by, there's going to be probably other services probably we're going to see, right, that we can provide more and more and more, right?
Right. Right.
But yeah, I was also want to say, I want to share what is the biggest misconceptions, right, people have about the crypto backed lending.
Yeah, it's a great question. I think the biggest misconception is that higher loan to value ratios, like basically the amount they could borrow up to, people have this idea that the more you can borrow, the better it is for them, right? For us, we're relatively conservative in the sense that, for like Bitcoin, ETH, Solana, you know, uh, we it's because we started with them, but for like Bitcoin, for example, you could borrow up to 50% of your collateral value. So let's say you have 100K worth of Bitcoin, right? You could borrow up to 50K initially, right? For XRP, it's slightly lower at 40%. So for every 100K, you could borrow up to 40K of US dollars or stablecoin, right? And sometimes a potential client will come to us and say, hey, like if I go on Aave or some other DeFi platform or another competitor, I could borrow up to like 65% or 70%, right? Um, but like crypto is volatile, and there's a thing called liquidation, right? For people who aren't familiar with it, it's the one caveat that all borrowers need to keep in mind is that the risk is that you can lose your crypto. And how that happens is a concept called loan to value ratio that what I was talking about. Is basically the math is basically the loan amount, the dollar that you borrowed, divided by the value of your collateral. So the dollar that you borrowed doesn't change. The numerator doesn't change, right? But the denominator changes. If the price of the crypto goes up, then your loan to value ratio goes down, and a lower LTV is a good thing. It means there's more cushion, it's healthy. But if prices go down, as it has been in the few days, or the past month or two, your loan to value will go up. And typically, when your loan to value hits a certain threshold, like 75% or 90%, depending on the platform has the right to sell off a portion of your collateral. That's called liquidating to pay off the loan, right? But they're selling it at that low price, right? And it's also taxable for you as the end borrower because they're selling on your behalf. It's as if you sold your crypto at that low price. So not only do you get, a low gain that you have to pay taxes on, but you also end up with less, right? Because that money isn't going to you; it's going to pay off the loan, right? So for us, we have conservative loan to value ratios. So sometimes people could be turned off by that, but it actually adds more cushion for massive and quick downturns like we saw just yesterday, right?
Right.
To date, not a single Lantern client has ever been forcefully liquidated. Um, if you recall, on this October 10th, there was a sudden flash crash that wiped out $19 billion in all of crypto, if you guys recall, on October 10th. Even then, no one got liquidated because at Lantern, we have a cushion, but even more than the cushion, and this goes to the concept of trust that Lashon, you mentioned, is we have a 72-hour grace period policy from when your loan first hits margin call, which is like a warning. So when your LTV hits 65%, then you have some, even if the price of the crypto goes down even more, even if the value of the crypto is lower than the value of the loan, you're protected for 72 hours. We will not liquidate your crypto, right? This is something that I don't think any other lender in the space offers, to my knowledge. I think we're the only ones who do this. And that's because we want to be aligned long-term with our clients, right? Clients come to us because their crypto is precious. It's not just money. It's, for a lot of people, it's been years of tears and sweat and blood accumulating across and holding through vicious dips, vicious cycles. And we don't want to be the ones to liquidate that. If we have to, we will. But we give that grace period policy where people have the opportunity to add more collateral, pay down the loan partially, or wait for the price to recover, right? And so that's kind of how we assess risk and manage risk. Yeah.
Like you guys offered exactly that same strategy for, like there's a lot of strategies to get that LTV lower, right? Helping them. Yeah. So that's big because that's a lot of options for them, and also because, at Black Swan Capitalist, we always like speak on what is happening in the implementation of a lot of companies doing right now in the crypto space, right? And one of that, liquidity is important, especially, right? So, and that, service, tailors me to the question I want to ask is one of the best questions. How does crypto collateral lending fit into a broader wealth or liquidity strategy?
Yeah. No, good question. We built Lantern with the idea of basically wealth creation, right? Basically, you already have crypto because you're bullish on it long term. We basically help, hodlers keep hodling, right? So basically with Lantern, you never have to sell, right? You could choose to sell when you want, but you shouldn't ever be in a position where you're forced to sell to access liquidity and take care of your needs, right? So from that standpoint, again, this is assuming you're long-term bullish crypto. No one knows what's going to happen, but for people in the space, we have a belief that over the long run, crypto is still very nascent, and so there's plenty of value creation that we can expect. No matter what expenses come your way or other opportunities come your way, with Lantern, you can basically keep your crypto and still access liquidity, right? To experiment, to cover emergency funds, right, and whatnot. So that's how, yeah. So basically, with us, you could keep your crypto for as long as you need to.
You enable the hodlers to continue to hodl.
Exactly. That's
awesome.
Yeah.
I want to ask a question, if I may, concerning mitigating risk. We touched on it a little bit. I have a personal strategy where I want to maintain a buffer that I can use to pay down principal, but also I know that there's an opportunity to hedge, right, using perpetuals. Coinbase offers a perpetual, and I'm getting smart on that. I know that we talked, Jung, and talked with Ed and Jeff and Priest. Now today we had a good conversation. Lantern has some services coming in the future where that may be an opportunity. But something that Priest, who is the co-founder along with yourself, mentioned to me. He mentioned what Lantern is doing with puts. And I found that very interesting. I was wondering if you could expound upon that. He mentioned a customer that he serviced this week that needed some protection. And he gave a scenario where you could insure about $100,000 worth of crypto for about $1,000, depending on the level of LTV, right? That also, and I'll go ahead and let you speak to that. So.
Yeah. No, that's a great thing. So it's something that we're still like working to productize.
It's very new.
Yeah. So it's the first time I guess we're ever speaking about it outside of the context of like clients. But yes, we did our first instance of buying a put for a client this week. The idea is basically, let's say your loan to value ratio is kind of nearing the liquidation level, right? Like 70, our liquidation level is 75% loan to value, right? So let's say you have a loan and you're at 2% loan to value, and the 72-hour grace period already expired, right? So if it hits 75% or higher, the LTV, we would have no choice but to liquidate a portion of the collateral to pay down the loan, right? But if the borrower in this case doesn't have additional crypto to post as collateral, and they don't have additional money to pay down the loan enough to lower the LTV enough, one option that we've been exploring and now we've executed on is puts. So viewers, you might have heard of call options or puts, right? It's puts but for crypto, right? It's basically you're buying the right to sell crypto at a certain price in advance, right? So in this case, let's say the liquidation level is $1.30 for XRP for this client at this time, let's say, right? And right now, cryptos are like, let's say XRP. I mean, I know it recovered a little bit, but yesterday it was at like 1.8, 1.78, whatever, right? So by buying and for puts, you could buy it in different durations. You could buy it for a 2-week duration, a month duration. Price changes, obviously, right? But in this case, the client hedged for till the end of this year so like 2 more weeks. So even and I believe the put was for $1 price, strike price, which means that over the next 2 weeks, even if the price of XRP drops well below his liquidation level of, let's say, 1.5, $1.50 of per XRP, even if it goes to $1, like $1, right, 1.00, he doesn't need to, he will not be liquidated. So it's liquidation proof completely.
Let me ask you a question, if I may interject. Do these puts for crypto, and these are, this is a fairly new concept, do they mirror all of the I guess the principles of traditional options plays as far as the decays?
So to be completely transparent, I'm not as knowledgeable about how that works, but
it's
in
a new
terms of like
space,
traditional, right? And even for traditional like puts and calls, like I'm personally not as well versed, but my understanding is there is a slight difference with crypto in that because there's no market close, right?
Okay.
It's
sort of
like
perpetual.
Right, exactly. I think there's like some issue, not issue, but there's some factor related to that with the pricing.
Understood.
But
you know what? With that being said, it's amazing and very interesting how cryptocurrency is going to affect traditional markets like options. Right. This is one example of that coming to fruition, and there's going to be so many different industries that are revolutionized because of cryptocurrency. So it's very fascinating, and these questions are coming. We're asking them for the benefit of one, for myself, but also as a customer, but also the audience who is going to watch this video, and hopefully they can become educated a little more. And again, we're so early, and I applaud you, Jung, and Lantern Finance for being brave to step out into undefined territory and plant your flag and say we're here, we're an option. Test us out. So far, my experience has been great.
I really appreciate that, Lashon. And also, as you and Prince were talking about earlier today, right? Like the puts, like that wasn't an option, pun not intended, but that was not an option even a few weeks ago, right? But for us, our main priority is always the top tier customer support. That doesn't just mean picking up the phone and answering questions. It also means being creative on how to protect, again, like what matters the most to our clients is their crypto. That's why they come to us in the first place, is to protect their crypto. They don't want to sell it. They don't want to lose it. That's why they add it as collateral and borrow dollars against it, right? So for clients where, again, like that specific client that we did the put for this week, he doesn't want to lose his XRP because he's really, he loves it. He thinks it's going to be great over the long run, but there is short-term volatility, right? And to protect against that, we've done this. It was like a manual process at first, but we're willing to do that to protect our clients, right? And we will be productizing this in the future now that we've done it. So yeah, that's kind of what we really stand for.
Yeah, no, great. If I may just add on to that, there are companies that exist that specialize in crypto options,
Yes.
and Lantern Finance has relationships with a few of these
Partners, basically.
partners,
Yeah.
basically. From what I understand, I know it's still a service that is fairly new, but if anybody were to collateralize their digital assets and take a loan out against them, and they wanted to execute a put, they could call Lantern, speak with somebody that's human, not a chat
Right.
bot, and Lantern would take the action on behalf of the client to put a put in place to mitigate any volatility.
That's exactly right. Right now, it's yeah, we're pretty personalized service for this. So the client would simply just have to text us, call us, or email us. But in most cases, if you're nearing the liquidation levels, we would have already reached out to you to give you a heads up and offer this as an option, right? Um, Down the line, once we productize this, clients will be able to do this on their own in their own Lantern dashboard, so that they don't have to bother calling us if they don't need to. Yeah.
No, that's awesome. And so puts are one line of defense against downturns in the market.
Yes.
We talked about perpetual futures also.
Mhm.
Coinbase, I was taking a look at what they offered as an option, and I believe their motto is you have to each contract consists of 500 XRP,
Right.
and you have to. How it works is uh, there's a certain percentage that has to be in place at different LTV rates, right? If
Mhm.
you have a strategy, right? So you don't want to go 100% in, in a hedge that will be referred to as a hard hedge when the LTV
Mhm.
rates are very high. But again, we should only do that when it's necessary. Right now, me personally, I carry a LTV rate of 35%, which is pretty safe. It's underneath the
Pretty
40%,
conservative. Yeah.
right? And my plan and strategy calls for no hedging at those rates. But I'm watching the rate as the market swings, and we also have the professionals at Lantern doing the same. So there's coverages at different measures
Thresholds of right.
thresholds. But a buffer, I had a buffer in place on the platform, and I'm learning myself. So all this is
Right.
fascinating.
Yeah.
I had the 400 USDC to
Yeah.
act as a buffer for the $1,000 that I borrowed against the $2,800 in collateral, which
Right.
was held in XRP. And then I got to thinking, I was like, well, what would be better, paying down the principal of the loan, or would that $400 be better, for GYW 1313 if I kept it in XRP
Right.
and implemented a perpetual futures, I guess, play, to the downside, and
Right.
I could produce more XRP. So these are the thoughts that I'm having, and I'm using
Yeah.
Power BI. I was telling Akram to come up with a dashboard, and I talked to Priest also to actually remove the emotion from the process. When LTV
Right.
hits a certain threshold, 25%, I guess, hedge in place. When it reaches a higher threshold, 50% hedge, right? Um,
Right.
with the perpetuals, I understand that there are fees that incurred every so
Right.
many hours. Um,
Right. Right. The
but
funding fees. Yeah.
Right. So I guess you have to really sit down and strategize what is going to work for yourself and your business in terms of your
Right.
overall risk management strategy. Is this something that uh, Lantern Financial is going to offer as a service? We have already heard you talk a little bit
Mhm.
about it informally.
Puts, yes. Um,
in additional
Perpetual
risk
futures,
measures.
yeah, perpetual futures, that's something that we are also looking into, frankly, but might be further away than puts, frankly, at this time. Um, the thing with perps are, it can also, yeah, if you're using it purely as for hedging, that's a different story, right? That's, I guess that's what we're talking about here. But yeah, it works a little bit differently. Funding rates can suddenly spike. For puts, you lock in a price, from my understanding, right? Once you specify the strike price and the duration. But for perpetual futures, the funding rate keeps changing depending on the market volatility and the supply and demand of who's, um, long and who's short. So that's a whole different kind of way to hedge. But that is something we're also exploring. Yeah.
Yeah, I wanna put Lashon on the spot here, brother. How was the experience actually setting up an account? And Young, I want you to also elaborate for the audience. So he's a perfect example for this, honestly, right?
Right, right.
So
Yeah.
I want Lashon to say, and Young, you could definitely add on to how the process was. Exciting.
No, no,
Yeah, Lashon, I'd love
Akram.
to hear. Yeah.
No, you know what? I'm honored to be in a position to be able to give a testimony. Revelation 12 verse 11 for all those in the audience that may be viewing this and that hold the faith. They overcame by the blood of the Lamb and the word of their testimony. So the saints are going to testify right now. The experience was unbelievably, what's the word I'm looking for? A pleasurable experience. Again, from the personalization aspect, being able to talk with individuals on the phone as opposed to being guided by a computer or a chat bot, that lowers anxiety. Again, now we have you on the podcast, Young, and any reservations that I've had, as I hear you pitch the product and the service, they get eroded because of the KYB aspect, right?
Mm.
I'm able to put a face, to the owners and operators of the business, and that goes a long way, right? Again, as opposed to dealing with somebody offshore, who I can hardly communicate with. So we tested the waters. We went ahead and I've been looking, as you know, Akram, and Jung and the team. I communicated this to for a way to collateralize XRP. I have a deep conviction, right, that there's going to be price appreciation related to all the different catalysts that are out there. I've been in the XRP community for quite some time. I've had the opportunity to meet Brad Garlinghouse, shake his hand at the Ripple Proper Party, and David Schwartz as well. That was a photo at the beginning that I was cheesing from ear to ear. But so I have deep conviction that borders on fanatical, right? But
Sometimes you need that for crypto.
so, right, that's how you survive, right? These dips.
Right.
But I stumbled across Lantern Finance after looking at Nexo to speak to the topic that we brought up earlier. The space wasn't that mature. They were forced out of the market because of the lack of regulation, lack of clarity. They're now trying to get back in, but they're not quite ready yet. Lantern Finance has a product and a service that is ready to go. It's simple, right? The interface right away. It lets you know that you're here to collateralize your digital assets. That is the first product and service that Lantern Finance offers: collateralization of the digital asset of the cryptocurrency. And the interface is simple, clean, and easily understood by the user. So I applaud Lantern for keeping it simple, because a lot of times we can overcomplicate things, and
Right.
and at this point we're so early. We want to make it easy for people to onboard. So
Yeah.
kudos to the team for that. Again, I'm still learning, but again, I'm very encouraged. And again, I've had access to the whole team: Ed, Jeff, Priest, Jung, And again, we're going to share this interview across our social media platforms. Akram is associated and affiliated family of of the Black Swan capitalists who are very reputable in this space, right? I have a name within the XRP community and Twitter, and I go by LB underscore Hakadesh, former, Crown Council member and investor of Expector, who's building a metaverse on the XRP ledger. Shout out to Dirk Shepins and his team. Right, they've been staples within the XRP community for some time. And I understand also, Jung, and I pass the mic to you. There's
Yeah.
a semi formal or informal relationship with XRP Bank. Maybe you can speak to that as well.
Oh, yeah. Oh yeah, no, XRP. He was one of the, because so far, so far we've kind of been, because we started accepting XRP as collateral earlier, just this year actually. I think it was like maybe June or May of this year, and since then it's become one of our most popular types of collateral, right? That's why we're so bullish on XRP. The community is just second to none, frankly. And people have been finding us simply through and then people have been mostly finding us through just inbound, right? People kind of like search Google or ChatGPT, Grok, different AI, services to kind of find us. Thankfully, that's been working. And as I mentioned, we speak with a lot of our clients like directly over the phone, over text, over email, and a lot of people have seen benefits from this. And you could check out our for viewers too. You guys could check out our Trustpilot page, as well as just trustpilot.com/lanternfinance, I believe. Or you can also find it on our landing page, and you can click on the Trustpilot thing. These are verified reviews from real users, and like we really do, well for our clients, right? We're there when they need us, in terms of both the product and also for support. And we kind of wanted to let the rest of the XRP community know, everyone, all the XRP community out there, know that we are an option and that we exist, right? Again, you might not need us, and in which case you shouldn't take out a loan if you don't need it. But if you ever do need us, like we're here, right? Like just know that we are a tool that,
it's not just XRP that you collateralize.
yes, we support 9 assets today: Bitcoin, ETH, Solana, XRP, Litecoin, XLM, Hedera, Cardano, and Doge. But obviously, the loan to value ratios are very different for all of them. Like Doge is like 25% loan to value, so very conservative given it is a meme coin. But that's we support those 9 right now. But basically, long way of saying, Bank XRP, he's a friend of the company, but he was our first kind of influencer we partnered with to get our name out there outside of just inbound kind of people finding us versus us saying, "Hey, world, we were here." So yeah, he's a good friend of the company.
Yeah, I wanna say, for the listeners, who may, be, maybe, new to the Lantern finance. So how do you explain what your company does in 1 to 2 sentences?
Yes. So we are a US-based crypto lending platform where you can borrow against your crypto so that you don't ever have to sell your crypto.
All right. Perfect. Lashon, if you want to add anything for definitely wrap things up.
No, listen, again, I believe in divine timing, right? I'm of the Hebrew Israelite faith. Akram is a Muslim, practicing Muslim, right? And Jung, I'm not sure if you hold the faith, or if you want to share that, right? But
I also grew up in a Christian family and
okay, awesome.
Presbyterian. Yes.
And respect to everybody's beliefs, but the world is changing. The world is coming together, right, in terms of how business is done, and what we're removing the friction, right? XRP is at the heart of that. All right, we're removing the middleman, and being able to provide these types of services, become our own banks, collateralize your assets. These are practices that the wealthy have employed for centuries, and the common man has sort of been left out. So for this service to be available to everyday regular people now that hold crypto assets, it's a game changer. And I just want to commend Lantern Finance and you, Jung, and the team, and Akram also as an innovator in this space, for being here. And we want to give glory to the creator, right, for allowing us to have this insight. Very grateful, very humbled, and
Yeah,
there's a responsibility that comes with it.
Yeah, and I want to live it off also because as we see, like even in the news, like the world is getting darker, right? When it comes to economy and uncertainty, what was going to happen, right? So this is why in this type of place right now in this time we need each other, right? As human beings, normally by nature we're survivors, right? So this is where we need each other, and that's exactly what we're doing. This is for the audience, right? Like we've been in this business, of course, in our, different fields, but in the same blockchain technology, space, right? And that's what we stand by. That agenda is we give the people and the audience the transparency and the loyalty they deserve, right? When it comes to finances and securing their futures. So, Jung, I want to give the floor to you before we close off. Do you have anything to say, or you want to share anything?
Yeah, I appreciate it. Yeah, no, I mean, yeah, just to reiterate, really, honored and really appreciate that you guys, had me on here. And Lashon, thanks for being a client, and really appreciate your vote of confidence and
I'm all in. I'm all in at this point. Wait, Jung froze on us.
He'll be back.
No, I'm really as we wait for Jung to return, I'm really taken aback by the whole presentation, the whole level of expertise. Obviously, if you want to bring a product to market, you have to know what you're talking about, right? Jung.
Sorry, I don't know what happened there.
Sorry about that. Yeah, something happened. I interrupted you and then it froze. So I'm going to be quiet now.
Yeah, no, I was just saying, yeah. It looks like there's two of me here. But yeah, yeah, I was just saying, thanks for all that, trying us out, for having me on here. And yeah, echoing what you and Akram were saying. There's a lot of for those just religious or not, or whether in crypto or not, it's just we live in a world now where it's hyper modern. Everything is a bunch of conflicting information out there. And finance, like the economy, isn't that great for the vast majority of folks. And kind of that's what crypto was created for, right? Kind of to level the financial playing field. But even then, it's become more of a tool for people who are more technical, right? Who can navigate smart contracts and whatnot. But crypto is meant for everyone, and the ability to borrow against it, being able to leverage your assets, is a powerful tool that the wealthy have been using for a while. That has, to your point, Lashon, haven't been available to the everyday person. And we think with our service, we enable that for everyone, right? And by being that tool, we give people the ability to better their lives, financially speaking, right? So that's what we're here for. And as I constantly kind of hammer in, is human support is beyond just support tickets. It's about building actual relationships, finding solutions for our clients, like the puts that we were talking about. We will go the extra step every single time, right? And we exist for our clients. So for anyone watching this, or anyone in the future who ever uses Lantern, I just want to I guess again just repeat that we exist for you, and we will, and that's we will do whatever it takes to protect your capital, to the best of our abilities, to be there for you guys, and yeah, that's kind of that's in a nutshell. That's what we're here for.
No, Jung Won Kim, thank you, and thank you again to the Lantern team, Lantern Finance team, for the the efforts that they're taking to provide that transparency and security, all the things that are important for crypto holders. Again, Yahuwah bless you. Godspeed. And again, I'm sure we're gonna do this again in the future. I'm all in at this point. I was telling Akram, I wanted to test the water first and
Right.
see how the experience was. And again, I couldn't have had a more pleasurable experience. The professionalism, the overall ease of use, great experience, and I recommend that others try it out and test the waters for themselves. Absolutely.
Yeah, and I want to
Really,
say to the
really
audience
appreciate that.
that we're gonna leave also Lanterns Finance link below. Give them the support you guys need. Look at it; it's amazing what these guys do. So, but thank you guys for being here, and Lashon, Jung, thank you for it's an honor giving us your time. Honestly.
No, thank you guys. Appreciate
All
it.
right, and we'll definitely speak soon. And make sure you subscribe, like, and share. And yeah, we'll catch base on everybody else. All right, take care.
Blockchain worldwide.
Take care.
Thanks again, Jung.